Welcome to episode 2 of How to Become a Millionaire for the Average Person series. I'm Voltaire Lepe, CEO of Lepe Tendwell Properties, top 1% agent in San Diego County. And today we're going to talk about your monthly principal payment pay down. Okay, so the monthly payment that you have, what is it? How does it work? How could you pay down the amount of money that you owe to the bank a lot faster, therefore saving a lot of money in interest and then growing your piggy bank or your equity in your home? So this is exactly how you do it.
Okay, so we're going to go into the monthly principal payment pay down method where you could increase and generate your wealth over time. So what is this? We're going to go over how to pay down your mortgage faster, and you're going to save a lot of money in interest over time. Okay, so let me share my screen. I'll show you exactly what we're talking about here. So there's going to be two methods that we're going to be going over. This is the example. So a $500,000 purchase with a 3.5% down payment, your monthly, your loan amount is going to be $482,500. So this is the premise of what we're going to be talking about today. So, this is one article we're just briefly going to touch on. How can I pay off my mortgage early? Okay, so there's bi-weekly mortgage payments where you pay twice a month instead of once a month, or you make an extra payment each quarter or every month. Okay, so let's go over the first one, mortgage payoff calculator. So again, our mortgage is going to be $482,500. So here we go. And then first payment, let's say you buy a property next month. And here we go. Total years of the loan, 30. And by the way, you could choose to get a 15-year loan or a 20-year loan. You'll save a lot of money there. So 3.5% interest rate, that's the prevailing rate. Well, actually right now, if you want to really use accurate numbers, it's somewhere around 2.75% interest rate. Okay, that's a $1,900 monthly payment. I'm gonna hit continue here, and then extra payment amount. Let's say that you could gather an extra $500, and then you make that monthly payment frequency to be every month. Okay, so let's change the date here. So next month, that's when you start doing it. Calculate must be after your mortgage date. Okay, so that's next month here. And let me change here. 07/01/2020. Calculate results. Here we go. So what this is saying is you'll save 8 years and 4 months by making this extra $500 monthly payment on the original 30-year loan. So in reality, instead of paying it off in 30 years, you'd be paying off in 21 years and 8 months. That's 28% faster payoff, which is pretty cool. And then the total interest savings that you'll be saving over this time period, it's going to be $68,000. So to borrow $482,500 originally on a 30-year loan, you're going to be paying $226,000 in mortgage. In interest, sorry, $226,000 just to borrow money over 30 years. But with this method, you'll actually be only paying $158,000 to borrow the same money. So again, that's how you use it. So you save 30% on interest. Isn't that's pretty cool, right? So that's one way, by making that extra monthly payment or that principal payment every single month. Now, the only thing with this is that whenever you do this, make sure that you tell your bank that extra $500 you're gonna be paying is going towards your principal pay down. Okay, you don't want it to go into interest or anything else. Okay, so that's one way to save yourself $68,000 in interest on a mortgage. The next way is by splitting up your monthly payment into 2 payments. Okay, so instead of paying every 30 days, you pay every 15 days, every 2 weeks. So we're going to go into the same scenario, $482,500 interest rate. We said it was like 2.75%. And amortization, 30 years. We're going to calculate it. Again, $1,969, just like the last one. Now, instead of making a payment, monthly payment of $1,900, what you do is you make a payment of $984, which is half of that, every 2 weeks. So what you do here is, instead of paying $226,000 in interest over the life of the loan, you only pay $196,000 over the life of the loan. We look at the amortization chart, you could actually pay off your loan. On the left-hand side, this is standard 30-year. Okay, pay it off in 30 years. On the right side, it's biweekly. Okay, so instead of making 12 payments a year on a monthly schedule, on a biweekly schedule, you actually make 13 full payments a year. That's just how the math works. So you pay it off at the end of 26 years. So you save 4 years of actually, or 3 years of actually making monthly payments. So you pay it off 3 years sooner, and then you save about $30,000 in interest. So if you decide to want to pay your mortgage off, you could use both methods. You could pay an extra $500 or whatever it is that you could afford every month towards your principal pay down, and at the same time you could break it up and do bi-weekly payments instead of monthly payments. So that
was some pretty awesome stuff. Over time, you could save a lot of money, and then that's going to help you, along with these other tips, to become a millionaire a lot faster in life. And again, for the average person. If you have any questions, go ahead and send us a DM, comment, or give us a phone call.